Is crypto dead in the USA? It is, according to Chamath Palihapitiya, tech billionaire and CEO of Social Capital, a top venture firm funding crypto projects. And his comments come as the SEC continues its anti-crypto crackdown, going after firms like BlockFi, Ripple, and Coinbase. Coinbase's CEO, Mark Armstrong, in fact, has said that the company would move out of the US if it didn't get regulatory clarity from American authorities. And Coinbase is currently suing the SEC to clarify whether the crypto industry is being regulated according to standard SEC frameworks. The US Chamber of Commerce is backing Coinbase. It's filed an amicus brief claiming that the SEC's regulatory chaos is by design, not happenstance. And some, like Nick Carter, the general partner at Castle Island Ventures, suggests that the SEC's crackdown on crypto is intentional and part of Operation Choke Point 2.0, a government program to take down the crypto industry. So what does this mean for crypto adoption? What does it mean for the industry in the US and elsewhere? And how does this impact price forecasts for Bitcoin and other leading cryptocurrencies? Joining me to discuss this and more is Sean Mackay, CEO of CoinPayments, an industry-leading cryptocurrency payment gateway and wallet. Sean, thanks for joining us. Welcome back to Kitco.
Thanks, Michelle, for having me. Happy to be here.
All right, great to have you back with us. A lot to discuss. But before we start, why don't we remind our viewers exactly what it is that CoinPayments does?
Sure. CoinPayments is a crypto payment gateway and also a custodial wallet solution. We offer software to help merchants accept crypto as a payment option in about 150, 170 different coins and tokens. And we also provide a full-service custodial wallet for over 2,000 coins and tokens as well.
All right, we're going to talk about all of those aspects, including the custodial wallet. But let's first focus on this whole hostile regulatory environment in the United States, because CoinPayments used to offer its services in the US, but now you no longer do that. What prompted that decision?
Yeah, it's mostly comes down to the regulation and not just the clarity for the regulation, but also, the US, you need individual state licenses rather than one license nationally, which causes all kinds of problems, and just the sheer amount of manpower and requirements to stay compliant there. That plus the hostility of the regulators as well, coming after various companies for various reasons, just wasn't a very welcoming environment to offer our services. And taking a look at our client base, most of them didn't reside in the US anyway, so it wasn't too difficult of a decision to exit the US.
All right, so it hasn't necessarily hurt your revenue streams, but what does it mean for the larger crypto industry? As I mentioned, renowned tech investor Chamath Palihapitiya, and I know you're going to correct me on how to pronounce his name. Feel free to do so. But the point is that he has said that US authorities are pointing their guns at crypto, that it's potentially by design. And we've seen this happen. We've seen the SEC ramp up its enforcement, as I discussed, regarding Coinbase. Bittrex is saying it's going to wind down its US operations because of this regulatory uncertainty. Do you agree that crypto is dead in the US, or perhaps dying, and that this lack of regulatory clarity is by design?
Well, those are pretty big words, dead and dying. And coming from Chamath Palihapitiya, I believe.
There you go.
My understanding of how to pronounce his name. But
apologies to Chamath, but go ahead, Sean.
I think his statement is coming from the right place of concern and stifling of innovation without this regulatory clarity. So on that front, I would agree. And there's a ton of examples in the US. Both the Bittrex leaving, Coinbase talking about leaving, demanding clarity. Ripple has been under the crosshairs for years now. Still no clarity there, no outcome either. It's just one of many, many examples of crypto firms that want to stay in the US and do business in the US, service the US, and are just looking for some clarity and some guidance on how to be compliant while offering the services. So that's one thing to keep in mind. But also, a lot of these companies that are demanding that are exchanges or other types of businesses like that. Whereas we're a little bit different. We're a payment gateway, so we don't offer buying and selling cryptocurrencies, trading, and all that. So it's just like slightly different regulation as well for us.
Slightly different regulations, but overall a very hostile regulatory environment in the US, from what I understand from what you're saying and others. So what does it mean then for the crypto industry if the US is increasingly hostile, increasingly unclear? Does it mean that operations just move offshore, overseas, out of the US? And does that, in a way, stifle the overall growth of the industry?
It certainly seems that way with the recent news and, the recent decisions that are being made. And, the world is a big place. It doesn't revolve only around the US, although they are one of the bigger markets, I will agree. So, yeah, I mean, as time goes by, there is a little bit more clarity kind of coming, little bits and pieces. It's definitely a conversation that's being pushed up in the governments to have an open discussion about it. Maybe some people aren't quite happy which way it's going or the pace at which it's going as well. And if they're taking this long trying to decide and debate and regulate crypto, just imagine how long that's going to be for the latest up and comer AI, right? There's going to definitely have to be some regulations there, and they haven't even finished getting done with crypto yet. So, yeah.
Well, arguably, it's probably a good thing that we stifle AI to some degree, arguably, until we get some more enforcements in place there. But focusing back on crypto, because crypto is seen as a big threat to traditional finance and potentially a threat to fiat currencies, as people would say Bitcoin is. You're a threat to many traditional finance operations yourselves. Do you think that this lack of regulatory clarity, again, is intentional?
That's a hard one to answer. I think there's certainly some people within government roles that are making these decisions intentionally and making these decisions without the right interests in mind, i.e. the public. But then there are some, good ones as well. So all kinds exist in the government, and unfortunately it's just the way it is. And you have to work with what you're dealt.
All right, so potentially when too much business leaves the US, perhaps we'll see a change in regulatory clarity in a better environment. But in the meantime, this is hampering operations. And back to Chamath, whose name I keep on butchering, he said in early 2021 that he expects Bitcoin will rise from about 39,000 at the time to 200,000 in 5 to 10 years. This was in an interview on CNBC. He said that Bitcoin is better than gold. What does it mean for Bitcoin if the US is seen increasingly hostile? Do you see it hampering price forecasts for Bitcoin?
I do think a lot of trading of Bitcoin volume does go on in the US, and the US market does play a big role in affecting the price of Bitcoin. So, it's hard to tell exactly how far the regulation goes with the price movements, but I don't think Chamath was too far off there with his prediction. 5-10 years, 200,000. That's some people consider that quite a reasonable prediction, and others would say, it's too low. Most people wouldn't say it's too high, I don't think, either. But yeah, yep. If we're taking a look at Bitcoin compared to gold, it makes a lot of sense. A lot of people have been comparing Bitcoin to a digital gold. It's got a lot of the similar characteristics of being a deflationary, limited supply. People kind of treating it the same way as gold, as a store of value. And with gold being at I think it's around $13 trillion market cap, and Bitcoin around $500,000 right now, bringing Bitcoin up to the $200,000 price per coin makes that about, I don't do public math here, but 8 times, we're about 200,000 right there. That brings it up to about 20% of the market cap of gold. That seems pretty reasonable, I think.
I'll check your math later there,
Yeah.
Sean. But yeah, we'll circle back to the whole idea of both gold and Bitcoin potentially being seen more and more as a safe haven and store in value in the banking crisis that we're seeing unfold. And get your thoughts on where you see the price of Bitcoin going, because as we said, that's a pretty conservative estimate by most accounts, $200,000 in 10 years' time. But before we do that, I do want to, again, focus on what you're seeing at CoinPayments, because crypto is in a hostile environment in the US, but adoption globally of crypto is in fact rising. What are you seeing through CoinPayments?
Yeah, well, we're fortunate to get a different view on the way crypto is being used actually in the real world, the way it was intended to when it was created. A lot of, the price action news, the news about, price fluctuations, market caps, regulation of exchanges, all of that. That's all kind of on the trading and the speculation side. But CoinPayments, we're processing actual payments for customers that want to pay merchants in crypto. So we're seeing the actual adoption side on our side, which is great. It offers a whole other insight as to how far things have come. Crypto's been around for, I don't know, maybe like 13 years or so. And the first 5-10 years, not much really happened. But now we're really starting to see some great adoption around the world. I say mostly in Europe because that's been our focus, but also a little bit in Southeast Asia and Africa.
And what is the advantage for merchants to take crypto payments? Why are they choosing to go this route, given the volatility of many coins, as you just said?
Sure. I mean, the nature of cryptocurrency itself offers a number of benefits to both the merchant and the consumer that wants to use it as a payment method. But, generally speaking, as a merchant, why wouldn't you just offer as many payment methods as possible? Try to not dissuade anybody from continuing with their checkout and making the purchase, right? Give them as many options as you can. But specific markets, kind of crypto is more tailored for. But I'll start off by saying it's not ideal for in-person payments at the moment. It still needs a lot of work to be done there. But online payments, it works well, especially these platforms like exchanges or Forex platforms or online gaming platforms, any kind of platform where users make a deposit into the platform to, top up their balance, and then they use the balance within the platform. That, and then kind of e-commerce stores where they're checking out for a specific payment. Crypto is like a borderless payment option. It doesn't matter what bank or credit card processor the merchant's using. It doesn't matter what bank or credit cards the customer is using. It's as simple as sending an email, really. You're just sending coins to an address to complete a payment. So it opens up a merchant's potential market globally, as long as they don't have to ship things to obscure places in the world. But, digital wise, it makes sense. And it's also the way that crypto payments work are that they're settled on the blockchain in seconds or minutes, versus taking days or even weeks for the card processors to settle the payments. So that's another benefit as well, especially for the online gaming platforms and other merchants that are in the high risk category, as far as to traditional card processors go. They would charge upwards of 10% just because of the high risk category they're in. And also, just have chargebacks, it's called, whenever the customer disputes a payment, and then the merchant has to go through this whole investigation, dispute case, taking time and money. They get charged penalties for that, whether they win or lose. And it's just a nightmare. And that's just one huge part of the e-commerce space that crypto solves for. There's it's settled in minutes, right? So there's no opportunity for there to be a chargeback or a dispute. There's just some of the reasons why crypto is a great payment option.
And I'm assuming that that's why it's particularly appealing to the gaming industry, the online gaming industry, because you want to make sure that, as a provider of that service, you want to make sure that customers have that money before they go and gamble it and potentially lose it. So is that where you're seeing the most growth? In which industries are you seeing it? You said online gaming, and what else?
Forex platforms, any kind of platform where a user deposits a balance. Those ones, and also in the e-commerce, the traditional e-commerce retail space as well. That's kind of where our initial focus was, and some of the markets in there that were quick to embrace it were the internet services market, like VPNs, hosting, domain sales, web design, and all of that kind of stuff. A lot of the developers that provide those services, the companies that provide those services are pretty technologically savvy, so their understanding of crypto and how it works. And so they were kind of like the first industry to really embrace crypto as a payment method. And then now we find it pretty well suited for the online gaming space because they have players all over the world. And again, their bank, our bank, intermediaries, trying to get that payment to come through properly, and then paying a ridiculously high fee on it as well. Crypto just solves for all of that.
Which coins are you seeing being used the most for these payments?
Yeah, well, I mean, CoinPayments has been around since 2013, so we're one of the older crypto companies out there. And when we started, we were the first ones to offer payment support for Litecoin and Ethereum when everybody else was just focused on Bitcoin payments. So from there, things have changed quite a bit. In the beginning years, Bitcoin was by far the highest transacted coin on our platform, representing probably about 90% of the total payment volume. And over the past three years, that's really shifted into stable coins. And now we're seeing, 30, 40% Bitcoin volume and, the majority, 50, 60% volume in stable coins, which makes total sense to me because stable coins really are more of a transactional cryptocurrency, whereas Bitcoin is kind of more of a store of value and in a speculative kind of investment type of cryptocurrency.
Well, we are seeing a potential big move for mainstream adoption with this latest out of PayPal. PayPal integrating cryptocurrency payments and transfers into Venmo. As we know, that's a very popular mobile payment app. And this new integration is going to allow users to not only buy and sell cryptocurrencies, but then to also send them to other Venmo accounts. So it's a big step towards mainstream adoption. What does it mean in terms of competition?
It's great. I mean, sure, now that PayPal, one of the larger players in the online payment space, is adding crypto support, a lot of people might think, well, there's your competition is now offering crypto. There's bigger players coming in the market. You're going to be in trouble. But I think, crypto's only been around for 10, 12, 13 years. It's any kind of big player adopting crypto, I think it is good for the overall market. The overall adoption brings awareness. It brings more help for people to be able to transact in crypto and be a part of that ecosystem. And the way PayPal and Venmo are doing it offers a really sleek user interface and a really easy understanding of how to use crypto. And, they did it in baby steps as well. First, they didn't allow crypto withdrawals to external wallets. It had to all stay within PayPal. So PayPal account to PayPal account, and now Venmo to Venmo. But they are rolling out withdrawals to external wallet addresses now. So, they're kind of taking it in stages, which is great. And overall, I think any kind of big news like this of a big company adopting crypto for their clients, I think is good for the whole industry in general.
Well, at the moment, they're only offering 4 coins: Bitcoin, Ethereum, Bitcoin Cash, and Litecoin, whereas CoinPayments offers hundreds of coins. But given that they are such a big player, how do you see it impacting CoinPayments in terms of encroaching on your territory?
I mean, certain clients, there'll be some overlap where they'll have to decide which service is a better fit for them. But other clients, just PayPal is not a good fit for them, and CoinPayments might be a better fit. The PayPal offering is still not quite clear exactly where they're going to go with it. I think they're trying right now more to focus on buying and selling crypto and bringing a crypto wallet to the consumers and individuals, and they haven't really placed their focus on offering crypto as a payment method for the merchants. Whereas that's been our focus the entire time. I'm not saying they can't roll that out next year and then become direct competition. I'm sure that will happen pretty soon, actually. But again, in general, any kind of adoption is great adoption. And unfortunately, I mean, not unfortunately, but the way they're starting, I think, is a good way to go. It doesn't really matter which way you start, because if you have a merchant that accepts crypto, you still need their customer to have crypto to pay with, right? So it's kind of a chicken and egg problem. You need both sides of that transaction to embrace crypto, own crypto, and have it ready to transact with.
Right. Want to get your thoughts on what is being called a major catalyst for Bitcoin adoption by Bitcoin bull and MicroStrategy co-founder Michael Saylor, and that is this Ordinals phenomenon. So firstly, help our viewers understand what exactly an ordinal is.
Well, the recent, it's pretty recent, not discovery, but a way around kind of the core code of Bitcoin to be able to create these ordinals, these NFTs, if you want to call them, not quite tokens per se, but they're, minted on the Bitcoin blockchain through these tiny transactions. So there's a lot of pros and cons, people for, people against. But in general, I think this is just bringing more attention to Bitcoin, more attention to crypto, more potential adoption, and any news about crypto, that kind of brings more people in and gets them aware, gets them interested in potentially using it, potentially, finding out more information about it, I think is a great thing. So yeah, I mean, ordinals are great for that reason.
Right. As you say, ordinals are really very similar to NFTs. They're inscriptions on a Satoshi, which is the lowest denomination of a Bitcoin. And Michael Saylor is saying, and I'm quoting him here, that every time someone builds an application that's cool on Bitcoin, like all the ordinals and inscriptions and whatever that are driving up transaction fees, it's a catalyst. He's talking about it being a catalyst for adoption. Now, we did see it cause a surge in network fees, which many saw was problematic. Do you agree, though, from a bigger picture perspective, though, that ordinals are a positive? Because there is some debate there amongst the Bitcoin maxis that think that in a way it sort of compromises the integrity of the initial Bitcoin mission. What do you think?
Yeah, I mean, I understand both sides, especially the way that these ordinals are created. They take up space in the blocks, and that space could have been used for an actual transaction of value. And the way to grow Bitcoin is by transacting value and increasing that. But at the same time, we need more eyeballs onto crypto, onto Bitcoin. So things like ordinals, which piggyback off the NFT craze, I think is also a good thing. So right now, the way the throughput capacity right now for the Bitcoin network is quite low. There's some layer 2s being developed, but I don't know that they're ever going to get to a capacity where everyday transactions are going to be able to be processed in an efficient manner. So, in the meantime, generally speaking, ordinals are great for bringing attention back to Bitcoin. So is the upcoming halving next year as well. That's going to be another big topic in the media as we approach that date as well. These are all things to bring people back to Bitcoin, back to crypto, and kind of, just keeping it top of mind.
Well, we have seen Bitcoin seemingly do very well as we've seen this banking crisis unfold, particularly here in the United States, where we had 3 of the 4 largest bank failures in American history taking place just since March. First Republic, Silicon Valley Bank, and Signature Bank, all collapsing. And that has sort of driven people, many would say, back into Bitcoin, which is seen as a counter to the traditional financial system. Do you see that playing a role here? Because if you look at, we did see the price of Bitcoin shoot up in March in an initial reaction to this banking sector crisis. Do you think that is driving interest in Bitcoin, the fact that traditional banking may look increasingly precarious?
Yeah, it does seem like that correlation was made. The bank implosions versus compared to the flock to Bitcoin driving the price up. Yeah, it's certainly bringing more attention to Bitcoin as an alternative to the traditional banking system. It's still not at a point where it can totally replace it or anything like that, or even close. But, it was originally created, the white paper, back in the 0708 financial crisis as a, solution to give the public another option than banks that might not be as trustworthy as they seem. So again, it comes down to more attention on crypto with these bank implosions, and then what's the alternative? Where can we go to? How can we keep our investments safe? How can we keep our nest egg safe? But yeah, I mean, at the same time, crypto is still very early days. There's lots of hacks going on. There's lots of education required for people to understand how to transact in crypto in a safe manner, how to keep their crypto safe, not lose their private keys. The list goes on. So like I was saying, still early days. I don't think crypto's quite there yet to be a solution for, the masses. For those who know a little bit more, certainly.
Did CoinPayments see any kind of notable increase of users in the backdrop of these banking collapses?
No, not particularly recently for that. Though that's more geared towards, I guess on the custody side, no, we did not. This is more, we're more of a payments gateway first, focused on merchant payments, whereas a lot of the banks are kind of more consumer focused, providing them banking services.
Right. Well, in terms of the custodial services that you offer, you do also offer a hot wallet. Help us understand what that is.
Sure. Well, there's two different things to look at here. One is a hot wallet versus a cold wallet, and then the other one is a custodial wallet versus a non-custodial wallet. So all a hot wallet means is it's connected to the internet, and a cold wallet is completely disconnected from the internet. And all a wallet really is like a private key and a public key pair. And you can think of the public key as your account number and the private key as your password. And so if you've generated all of that offline and it's never touched the internet, that's called a cold wallet. A lot of that, you get a lot of those through like paper wallets back in the day, or memory USB wallets like a Trezor, or the other one.
Ledger.
Ledger, thank you.
Yeah.
So those ones are also cold wallets, disconnect from the internet. And then the hot wallets are connected to the internet to be able to kind of transact in a more efficient manner. And then there's the custodial and the non-custodial wallet. And so we offer a custody wallet where we hang on to all the private keys so that we can do all of the interactions with the blockchain on your behalf. And you just have to click a few buttons and use an email address and a password to log into your account. Whereas a non-custodial wallet would be something like MetaMask, where you are in charge of keeping your private key safe. Don't lose it, or you're not going to have access to the crypto on that wallet anymore. So it basically gives you more control, and it goes with the saying that's been passed around for the last few years. Not your keys, not your coins.
Yeah.
Yeah. So that's one way to look at it. There's trade-offs, right? If you're comfortable with being your own bank, providing your own security, making sure you don't lose those keys, then by all means, go for a non-custodial wallet. But if you want the convenience of kind of everyday use, and you just want, email, password, login, click a few buttons, ready to go, then maybe a custodial wallet is a good solution for you.
And with a custodial wallet, if you happen to forget your password, there is a recourse for action there.
Right. I mean, it's a typical account management style platform. You click the forgot password button, you go back to your email, you reset the password. If you don't remember that, you can contact customer support and usually kind of get to it that way. But because it's a custodial wallet, the platform itself, the custodian, has access to the keys to your funds, and the funds are just being kept on the platform for you. So you just need to prove to them that you're the owner of that account, and they can help you get your funds back. Whereas when you have your own private keys and you lose those, there's nobody to go to reset your password, to get a new key. It's just gone. So that's a different mentality than what people normally know about. You can think of it like, if I don't know, I don't have a good metaphor for it. Like I was saying, it's pretty new.
Okay, but if you do use CoinPayments or another custodial wallet, which, as we said, is a hot wallet, you're relying on that interface to access your coins. Now, CoinPayments has been around, for 10 years now? But with less established players, there could be some concern that they may not be there. What would happen, for example, if I have my coins in a CoinPayment custodial wallet and I leave them there, and then my great-grandchildren want to access my Bitcoin fortune somewhere down the line? Can one be assured that the CoinPayments platform or another custodial platform still exists? And if it doesn't, how does one access the coins?
Well, that's a tricky question. I mean, you should read the user agreement, the terms of service as a starting point. And, reputation and security of the platform and all that stuff is important as well. And with crypto, you definitely got to do your own research. But yeah, I mean, the recent bank closures, banking crisis also kind of brings up that question. If you've got funds stored in the banks, but then the government tends to step in to help with that for customer deposits when needed. But there's nothing like that for crypto, right? The banks or the governments aren't stepping in to make people whole on crypto and all that kind of stuff. So you're really reliant on the trustworthiness and reputation of the platform that you're storing your funds with. And for that, really, I guess it comes down to a judgment call if we're talking 20 to 30 years from now.
Well, I guess we don't have to go that far into the future, but I'm not even asking about necessarily what we saw with an exchange like FTX, where they used the coins against the terms of service and used them for leveraged trades. If you do have your money in a hot wallet and you rely on that interface to access those coins, what happens if, the company ceases to operate? Is there a way to then get the crypto in your wallet on that hot wallet?
The short answer is no, because it's not your keys and it's not your coins, right? That's the short answer. The longer answer is it depends on the company and what their policies are. CoinPayments, for example, we do not invest customer deposits. We just keep them secure, mostly in cold storage, cold wallets, and just a little bit in the hot wallets to fund the daily transactions. Other platforms like FTX, like you mentioned, and Celsius, there's been a bunch of implosions in the last few months. They all invested their customer deposits, or at least a large portion of them, and then ran into all kinds of problems when the prices changed, when interest rates were changed, any kind of number of external factors. Terra Luna was another one that kind of caused a lot of implosions. So yeah, I mean, it depends on company to company, but someone like CoinPayments, if we were to shut down for whatever reason, we have all of our customer deposits and we're going to try to get them back to everybody. And if we can't, then, we would keep it somewhere and let the customers know who to contact in order to reclaim it.
And what is the business model behind you then offering a custodial wallet solution? Why are you doing that? What is the revenue stream from that if you're just maintaining the coins there?
Yeah, I mean, we need to run these coin nodes and wallets for our own uses for the payment gateway side. And so we just offer this custodial product as a convenience service, really, for the merchants. And then, we do have non-merchant individuals, consumers that come and create a CoinPayments account just for the wallet because it's pretty convenient. And we got, over 2,000 different coins and tokens you can store in one account, plus all this other functionality like sending, receiving, converting, buying crypto, that kind of stuff. But yeah, the business model behind the custodial service would typically be charging a custodial fee or maybe making a percentage on a deposit or a withdrawal. None of which we really do on the custody side just yet, because our focus, as I mentioned, is growing the payment gateway and the business, the merchant side, and offering this custodial wallet to the merchants when they receive the payments. Where does it go, right? And we allow it as a default, put it into their custodial wallet, but they do have the option to not store it in there and store it somewhere else instead.
Right. You mentioned the thousands of coins that CoinPayment uses. Let's talk about Pepe Coin. That's seen, I think a 19x gain since the start of the year. It's a cartoon frog used in memes. That's the basis of this coin. Correct me if I'm wrong. Does CoinPayments facilitate Pepe Coin?
That's my understanding of the meme as well. And it's, as far as I know, it's a ERC20 or a BEP20 token. Maybe it exists on both networks. But in any case, yes, we support both of those along with many others. So by default, you would be able to get a wallet for your Pepe coin, store sending and receiving it. We haven't quite integrated it as a payment method. Don't know if it's still pretty new. Don't really know what's going on there, whether people actually want to use it for payments. But I can tell you some of the other meme coins like Dogecoin, for example.
Yeah.
That has been on our platform, since the early days. And surprisingly, it's been in the top 10 most transacted, like top 10 volume coins for pretty much the whole time. I don't understand why. I mean, these holders of Doge just love to spend it. They love to give Doge to other people, use it as a payment method, drive adoption of it. It just, it's hard to understand.
Well, it's Elon Musk's preferred coin, it would seem.
Would definitely seem that way, yeah.
So you're seeing
even
Doge...
even before Elon got involved with Doge or even mentioned it, it was a highly transacted coin for payments, which is, it's always been surprising for us. But so that's why this isn't so surprising, having these crazy meme coins go on these runs, having Elon make a tweet about it and changing the price overnight, all that kind of stuff. It just kind of goes into the meme coin territory.
Do you have any potential forecast based on what you're seeing as to what could be the next meme coin that starts to gain traction? Are you starting to see signs of movement on a meme coin that perhaps we're not familiar with?
I have no idea. No. We
had to ask.
Just pop up out of nowhere and then they go crazy, and some of them disappear just as quick.
So you don't start to see like, this is creeping up in use. This is interesting. This is going from 100th most used all of a sudden to 80th most used, and you're not potentially tracking some kind of movement in some of the lesser known coins and perhaps being able to extrapolate something from there.
Yeah, again, we're a payment gateway, not an exchange, so a lot of...
But using that as a payment is what I mean. If you start to see a certain relatively unknown coin being used more and more, you're not having any observations like that, or are you?
We see that from time to time. We used to have a coin hosting program where we'll bring on a new coin and then we'll see their volumes change over time. But as far as these meme coins go, nobody's really transacting payments-wise with them right in the very beginning, at least. It's all speculation and buying and selling, trading. So that's not
Sean,
really what's done.
I was trying to see if I could get a meme coin prediction from you. maybe give our viewers a potential insight. Not that we're advocating for this necessarily, but maybe we could be ahead of a trend here. But one thing that we do know is that the Bitcoin trend has been around for a very long time, and it's actually increasing in terms of how it's being absorbed by governments. And I want to get your thoughts on that, because we know El Salvador, Central African Republic have made Bitcoin legal tender. But we had an interesting development from Liechtenstein, where they announced that Bitcoin would be permitted for government payments. The Prime Minister of Liechtenstein, who's also the country's finance minister, saying that they plan to accept Bitcoin payments for certain government services, and that they're also open to investing state reserves in Bitcoin in the future. What do you make of that, Sean?
I would say they're not the first to do that, and any kind of news like that is good news in general for the adoption. I think certain states in the U.S. allow you to pay your taxes in Bitcoin. They allow you to, I think, pay for other government services in Bitcoin as well, from what I recall. This seems like a great idea, and to be able to diversify some of your holdings as well into crypto, I think is also a good idea. I think by this point, crypto's proven that it's here to stay. There's been a number of crypto winters since CoinPayments started, and a number of crypto winters since I've gotten into crypto. And the first one back in 2018, that was, for me, the worst, I guess. And it was all doom and gloom. Crypto's dead, Bitcoin's over, all that those were the headlines back then. But now you don't see headlines that crypto's dead because people just know it's here to stay at this point.
Well, you're seeing headlines like crypto is dead in the USA in terms of the crypto companies as we started off our conversation. Sure. But yeah, I get your point there. So you've gone through several crypto winters, as you've mentioned, survived and thrived through all of them eventually. What season of crypto are we currently in? There's talk that we are back in crypto spring. What do you think?
It's close. I think the winter is showing signs of heating up. It's also a different situation on the macro side. Since crypto's inception, we've always been in an environment of low interest rates and low inflation, just prosperity, right? That's
very loose monetary policy, money flooding the market there, yeah.
Exactly, yeah. And it's just been a period of prosperity, easy to raise money, easy to borrow money, all that kind of stuff. And now we're in a completely different type of environment of high interest rates, high inflation, government agencies trying to get it all under control. So we're in a very different environment now that we're approaching the next halving next year versus the environments that the halving was in the previous years. So that's what makes it a little harder for me to tell you what season we're in for crypto right now. But generally speaking, I think the news is starting to shift more positive again. We're seeing a lot of good indicators that crypto is kind of back and people are kind of coming back into it. So I would say we're getting into the spring now.
Do you dare have a price forecast for Bitcoin? We touched on the 200,000 idea in 5 to 10 years time being very conservative. Do you have a price forecast for the next 5 years for Bitcoin? Have to ask.
5 years? Okay. Well, do you want an outrageous prediction like some have given?
I want the prediction that you think is... I want the prediction that Sean Mackay thinks is the most likely and realistic. You can give me a 2-year and a 5-year horizon. How about that?
Yeah, so the 2-year kind of coincides with the halving. So that one, I guess I can try to be a little more confident about. But again, not investment advice. Do your own research. All the fine print there. But I think the coming halving and bull run will bring Bitcoin above 100K. 5 years from now, I honestly have no idea. I think Chamath's prediction of 200K is pretty realistic, assuming things kind of progress down the same path that we've been going and without any major hiccups.
Yeah. Okay, so 100K by 2024. Standard Chartered Bank has that as an estimate as well. Certainly several guests on the show concur with that. So we've discussed...
What's the new all-time high, right? Anytime there's a new all-time high, it's a good thing, I think.
Yeah.
Even if it's not double, triple what the previous one was.
Not quite ready to call crypto spring yet, but Sean, I do have to get your thoughts on something that certainly gives me the chills that would spell winter for the world economy at large, in my humblest of opinions, and that is the idea of a central bank digital currency, which, as a reminder to our viewers, is a form of fiat currency issued by a country's central bank, which would allow the government to monitor every single transaction and payment made, obliterating any kind of privacy, and could also be potentially programmable, allowing the government to decide when you can and cannot spend your money. How do you see the idea of CBDCs, should they in fact become a reality, work in a world of cryptocurrencies and in a world of coin payments?
Yeah,
big question to end off the interview, Sean. Big question.
Well, I get where you're coming from and the concern side of it with the privacy. And, if we're talking about replacing, like going completely digital, no more cash, no more in-person transactions, only using the CBDC, then yes, that's going to be a huge concern. And I think the public will want some reassurances on, what privacy features they're building into this, and how they can trust. Right, trust is a big thing. It's coming up a lot these days. Always has been, I guess. But yeah, the CBDCs, it's also unclear whether they're going to operate on a public blockchain or whether they're going to issue it on their own private blockchain. So from one CBDC to another, that one criteria could change a lot of how it's all run.
Do you see the idea of a CBDC, though,
I
as
think
an existential threat if it's implemented in the most dystopian way, I suppose, as an existential threat to the whole idea of coin payments, for example? Or do you see a coin payment interface sort of integrating a CBDC?
Look, a CBDC, I think, in general, high level, is a good step forward. I don't know if you've tried to send an international wire lately, but the chances of it actually getting through to the other side, the intermediaries, and it's got to hop through, the amount it costs, the amount of time it takes to settle. I mean, those numbers are staggering considering the day and age we live in, right? Does that make sense to you? It doesn't make sense to me. So having a CBDC to be able to transact internationally on a much quicker, more efficient level, lower fees and all that, that makes sense to me. And that, I think, is a great idea. If the plan to roll out a CBDC is more control over the public and your citizens that are using that currency, then that's certainly concerning, and the fine print needs to be looked at. As far as CoinPayments maybe integrating a CBDC, again, that depends on if they're issuing all the CBDCs on a public blockchain, kind of like the stable coins do, or if they're running their own system. I mean, it doesn't even need to be a blockchain if it's a CBDC technically, right?
Yeah, I guess it's still a very, very uncertain future where things stand with that. In terms of the more immediate future, what can we expect from CoinPayments?
Yeah, well, as I mentioned, we're kind of in a crypto winter, hopefully starting to heat up. So during the past few months, we've just had our heads down building. And I think a lot of crypto projects out there kind of take that time during a crypto winter to do the same thing. Just ignore the doom and gloom media headlines and just get down and continue building, right? And so when we do come out of this crypto winter, there's going to be some great releases of new features, new products, maybe even new use cases for crypto in general, because all these teams have been hard at work through the winter. For us particularly, we're hard at work making a major improvement to our platform, more secure, more scalable, faster, more coins, more features tailored towards the merchants and businesses that use us. We just started getting back into the conference circuit this year. I guess COVID kind of put a hamper on that for a few years, but even before that, we just decided to take a different route. But anyway, so getting back into our first conference in February has been a real eye-opener as to what features the businesses we service find important. And so we're taking that into account during this time that we're redeveloping our platform.
All right, so growing and developing. Thank you so much for sharing your insights with us, Sean Mackay, CEO of CoinPayments. Appreciate it.
All right, Michelle, thanks for having me.
My pleasure. Thank you again. And as always, thank you for watching. I'm Michelle Makori. We'll see you next time.